Good morning, everybody. Good morning, Andy. You flatter me. Admiral of Advantages. Man, Ron, I need to be writing these down. These are great. How's everyone doing today? You guys feeling all right? Ready to do some stuff and things, I hope? I am so ready. Gonna be a good day, guys. We're gonna have a lot of fun today. Um, I hope we are. I am. I'm gonna do the same thing I did yesterday. Probably the same thing that I'm going to do on Monday, and then I will take a minute. And on Tuesday through Friday next week, I'm going to do the exact same thing. Because, guys, today's lesson is mastery through repetition, right? If you want to master a habit, the key is to start with repetition, not perfection. You can't be perfect. Not out of the gates, guys. I know you want to be. And I know your grandmother told you that you were, but this is something new. This is a new skill set, guys. This is you learning how to not have to go to work anymore. This is you learning how to make money every day in your underwear if that's your choice. Guys, so what we're going to do is we're going to talk about advantages. We're going to look at advantages throughout the day. We're going to talk about what they mean to you, and we're going to talk about how you can get better at them. The software is amazing. The software is outstanding. The software is the most high-tech elliptical you will ever get on. But if you don't figure out how to turn the elliptical on, you're probably not going to find the progress you're looking for. So my job is to teach you how to use this amazing tool, guys. And we do it through repetition. We do it through visual. We do it through conversation. And we do it through discussion, through you asking me and me answering you. Good morning, B. It's great to see you in here. Good morning, Mike M. No news is good news, guys. Every morning, part of that repetition, go to forexfactory.com, look for high impact news. And that's that red box. And that red box lets you know that things could go crazy, that the market could spike, that somebody with more money than you is going to react to whatever the news is. And you don't have to be a part of it. So anytime I see a red box, I don't trade a minute or two before it. And if it makes the market spike and jump, I let the market calm down a little bit before I try to take a trade. That's just my whole approach. If you are a part of the Nexgen funding company, there's actually a rule that says do not trade high impact news. So make sure you're checking it each and every day. What else? Look at these charts, guys. We're going to watch live charts a lot today. And we're going to talk about a couple different things. We're going to talk about momentum. We're going to look for a separation between these small triggers and these large triggers. And what we're going to be able to do is we're going to say that when there is a gap between them, I have the advantage of momentum, guys. I have a market where the odds are favorable for it to continue in the direction of the trend. And that's all momentum is, guys. And it's easily picked out of the lineup. When the background on your large chart, your big chart, your slow chart is green, guys, momentum means that your smalls are above the large, that there's space between. The odds are favorable for that market to continue up. In a downtrend, when your background is red, your small triggers are down below the large triggers. Space between lets me know that the odds are favorable for the market to continue down. Good morning, Chariot 107. Good to see you in here. Guys, this is your first lesson for a reason. This is the first thing I talk about each and every day. Because when you have momentum, this is a look that pushes a market. This is a look that creates the potential to break key areas, guys. This is a look that lets me know that the people in charge are going to make it difficult to stop that forward progress. And I want you to see just how easy rule number one for a high probability trend trade can be. Can you guys give me a why? If you see that there is a separation between the small and large, the background is green, my trend is up. My small triggers are above my large triggers, and it's that space, guys. You could do a little dance in between them. That is the look for strong triggers, guys. And when that space goes away, we call it weakness. It's easy to see it once. It's easy to understand it. Let me show you how to burn this image in your mind and think of advantages, guys. Go back and take pictures. Take 1,000,000 pictures every week and type out, this is strong triggers. This is rule one. This is the advantage of momentum. Yippee, right? It should resonate. Every time you see this, your brain should get excited about that look. And over here, when the space is gone, this is weak triggers. And guys, when you have weak triggers, there is no momentum. Not odds favorable to continue the trend. No advantage. And what we're doing is we're creating this recognition so that what we can do in the moment is go back to our large chart and say, I do have separation between the small and large. Everything is green. They're going up. Can you guys give me a Y if you see it on this most current bar in the S&P? I do, in fact, have momentum. Does that make sense? Pretty cool, right? That's not a difficult look. That's one bar, two trigger lines saying, hey, guess what? The advantage is there. And then the smalls are down. The large are up. Well, that's not the same look as momentum, is it? This is not my advantage. And it really can be that simple with a little bit of study. Guys, momentum is amazing. Momentum pushes a market. Momentum is one of my favorite advantages because it's so hard to stop. You're going to see people in this room with entire plans built around having this momentum, but they're also going to make sure that they have a clear path. And that's the second advantage that every trader needs to have the highest chance of success, guys. When you have a market that is screaming in the direction of the trend, when it has all of that momentum, all of that goodness, when it's hard to stop, you got to make sure there's not something in the way. We call these termination conditions. And termination conditions are just horizontal lines on a large chart, guys. They all have names. I'll give you the names. There are divergence highs and lows. Divergence, let's zoom it in for you. Divergence is a magenta line that prints off of a pivot, guys. And what this magenta line says to you is there was a loss of momentum. That's all it is. The buyers pushed up, the sellers said get bent, we're going back down, and we steal your momentum. This pink line becomes a line in the sand, and if the buyers try to cross it, it's very possible the sellers are going to open up on them. You see the same thing from a low. If the sellers are in control, the market is moving down. If the buyers really want it to go up, they're going to push it up. They're going to steal the momentum. Nexgen users see that in the form of a divergence line. And once again, this line becomes like a line in the sand, taunting the sellers to take a second shot. So divergence lines can stop a market. Yellow one-to-ones can stop a market. Red Fibonacci resistance, blue Fibonacci support can stop a market. And we're going to use the trigger lines, those same trigger lines that create momentum, to understand whether or not the area is likely to stop the market. And let me give you the recipe. If your market moves up and reaches one of those horizontal lines, all you have to do is count triggers, guys. And the trigger count is pretty easy. When you get to one of these lines, we've got every example in one picture of the live market here. You're going to see a couple different scenarios. And I'm going to show you exactly what it is. We're going to do a lot of pictures today, guys. I'm in a picture-y mood. If you reach one of these lines and zero triggers get through, neither of the small, neither of the large, zero triggers through the area will hold. That's what I want you to think. Zero triggers. This area is going to stop all forward progress. This area is going to create an untradeable bounce. This area is going to ruin my chances of any wins with a long trade. And it may not. It might break. Areas break all the time. But let me show you kind of the process for breaking an area. First, what happens is you get two triggers above that area. And what two triggers means is that it may break, and it has potential, but not likely. And I want you to believe that in your heart. It's not likely to break. I don't feel that great about it. I don't think I want to take a trade yet. But then you get three triggers through the area, two smalls and a large, and three triggers says, okay, let me type two triggers on there. Three triggers says breakout is more likely. And that's where we're going to start looking for opportunities to trade the potential to break these areas. And guys, when 4 triggers, that's the wrong one. When 4 triggers, both small and both large, break an area, that's when an area is considered broken. And that broken area, if it used to be resistance, now behaves as support. And if it used to be support, it now behaves as resistance, guys. So we're going to take triggers and let them tell the story. No triggers through, absolutely no trade. When both the small and the large get below that area, guys, I've got a clear path to my next area. I've got smalls below the large, and I even had a pullback, whoa, right to an area right inside of trigger lines. Guys, that's actually the entry for what we call a high probability trend trade. So life is about advantages. Trading is about advantages. Trading is about having an edge. And we're going to focus on, for my Ninja Trader users this morning, those 3 advantages. Momentum, identifying it through strong trigger lines, a clear path, counting the trigger lines every time we reach an area, waiting for an edge or an advantage of a clear path, and then finally, you're going to be able to define an entry by using a limit order at an area inside of triggers, guys. And that's the recipe. And rule number 3 is where the amazing accuracy of this methodology comes into play, because you can use a limit order at an area inside of triggers. Notice how I say it's slow and deliberate, because that's how you're going to identify right where the market is most likely to bounce and where it's most likely to continue with the large chart advantages. Let's see if this one's setting up. When the smalls are below the large, the odds are favorable for the market to go down. When I am below these triggers and I haven't this fib and I haven't reached this fib, I have a clear path to get to 66.14. Rule number 3 says, and let's just go ahead and do it right here while it's in the moment, says that I can sell a pullback. This little up move, when this says down, that's a pullback. It's a tiny retracement counter to the underlying trend. The trend is down, the triggers are down, the momentum is down, the path is clear to the next area. We're going to wait for our small chart to go up. And as it goes up, we can define where it's most likely to retrace. Large triggers and synthetic triggers on the small chart define the retracement point. And the rules say I need an area, fibs, midbands, or yellow 1-to-1s inside of those triggers, guys. And I'm so convinced that this methodology is sound that I will wait for the market with a limit order just below that area and hope I get an entry. Because, guys, this is a pattern. That's all it is. It's just a pattern that typically wins 70 to 80% of the time. This is a pattern that teaches you to recognize momentum, that teaches you how to identify entries. And this is a pattern that optimizes your chances of success as a brand new user, because it teaches you to recognize advantages and to capitalize on the advantages that you see. And guys, this is a pattern that is the beginning of your journey. Because once you recognize momentum, and once you get in the habit of identifying that clear path and counting triggers, what happens is you'll find your entry. You'll find your path. You will find your plan. Until you can do that, I give you the KISS plan. I've already dropped it in the room. I'll drop it in another time. The KISS plan is designed to optimize the new user's chance of success with that high probability trend trade, using momentum, path, and entry. And guys, through simulation, through study, through class feedback, through repetition, you're going to create your own plan. And your plan is going to be based on your personal goals and your ability to read the indicators. Good morning. You're getting an eye shot this morning, Steve? Man, that sounds painful. I hope it goes well. So guys, there's 2 things that you need to know before you enter the market. And this is something that you're going to blossom into. This is not something that you're expected to know right off the get-go. That's why I give you the plan. You have to know why you will enter. Entering a trade should be because your rules are met. Because my rules describe a pattern. My rules are a visual of what it means when my pattern is true. So momentum, path, and entry. Those are my rules, and those rules describe a large chart look defining rule number 1, a large chart look defining rule number 2, and a small chart look defining an entry on rule number 3. And all it is a pattern. And when the pattern is true, this is your look. And the look doesn't change, guys, because the pattern doesn't change because the rules are constant. So this plan tells you when it's okay to trade. It tells you when it's time to get into the market. And this is a pattern that's been proven to win more than it loses, which means that you know going into this trade that you have an edge, that you have an advantage, that you have a pattern that can be proven to win more than it loses. But the other side of that is that you know that it will lose from time to time. Guys, understanding that you never know the outcome, but you know when you have an edge, takes a lot of the emotion out of the trading. The second piece is understanding why you will exit a trade, guys. I exit a trade because I hit profit targets. That's my favorite way to exit a trade. Or because the advantages that get me into the trade disappear. Maybe I reach an area that could stop the market. Maybe I get outside of those trigger lines that define the retracement zone. Maybe I get 3 divergences on a small chart. Management is where fortunes are made, guys. Management is where you're going to win or lose the most. It's not going to be your entries. You guys will all see entries relatively quickly. So define your entry. Make sure that it's solid. Use a checklist. I give you a checklist. Because great entries create manageable trades. But then you've got to manage it. So this plan gives you a very mechanical, a very if-then, a very solid management plan to learn how to get paid, to learn how to move stops. Everything that you need to be successful with the software as a brand new user is right here in front of you. The only thing that you need to learn how to do is use the tools to recognize momentum, to understand clear path, and to define your entry. Guys, that's my job. My job is to teach you to read indicators. So your job is to learn the looks so that you can identify advantages, to take those trades on simulator, to practice them, to get into the market, to get out of the market, to be willing to lose for the sake of the lesson. And then guys, post your trades in the room. Every time you post in the room, it's a private session with me. Every time you drop a trade in the room, you're going to say, Mark, this is how I read my trigger lines for momentum. Did I do it correctly? Mark, this is what I thought about the termination conditions. Did I identify that potential to break correctly? This is where I took my entry. This is where I took my exit. Mark, if you would do me a favor and tap into your 6 or 7 years of knowledge with these indicators and make sure that I'm reading them correctly, make sure that if I could have had less risk or more profits, you give me that little heads up. And guys, my promise is that I will. But you have to post in the room and you have to tell me what you see so we can make sure that you're seeing it correctly. The other thing that's going to happen is your annotations, when you do it well, you're literally writing the recipe for success. I had strong triggers. This area had the potential to break. I took a pullback to an area inside of triggers. Rinse and repeat, guys. And that's really the thing. Keep it simple. Learn your looks. And when you learn your looks, they become easy. And the more in tune you are with what it takes to get you into the market, the market slows down. The market literally just pumps the brakes and waits for you. And you'll get to the point to where you can call your shots. Whoops. Price reached, Fibonacci resistance. Every trigger line remained below. Does everybody see that? That says, hey, Nexgen users, this line may stop the market. But Mark, the triggers are up. But Mark, it looks like I have momentum. Guys, this is a brick wall of just nastiness waiting to take your money, and look at the reaction. Look how far away those large triggers are. This is a good indication. Price typically returns to the large triggers. You hit something solid and they're more than a bar away, price is more likely to close that gap. There's 100 reasons not to take a long trade here. As a brand new user, you're probably going to get in at that mid-band hoping that it works out. You're probably going to take a loser because you are in a learning process. That's okay. Do me a favor, post the whys in the room, and I'm going to find the right picture here. Let's talk about it. I'll teach you how to fix it, guys. Use a spreadsheet. So there's two things that are going to get you where you want to be the fastest. The first is ask for feedback, ask for help, guys. I am the warmest, fuzziest, want you to succeed guide you'll ever meet. So when you post in the room, we'll talk about the good and the bad, and if there's any bad, we'll talk about how to fix it. The second thing is commit these looks to memory, guys, and that's where the spreadsheet comes in. Repetition creates recognition. I can't say that loud enough. Seeing the same thing over and over creates repetition. So this first spreadsheet that I'm giving you is for you NinjaTrader users. And it talks about strong triggers, exactly what it looks like, and there's over 50 pictures, guys. And each of these pictures, I know because I put them in there myself, is annotated. Smalls above the large, scissors are open, strong triggers look like open scissors, odds favorable momentum, rule 1 met. Same thing here, smalls below the large, scissors open, odds favorable momentum, rules number one met. Guys, you can't see this look and read those words 50 times and not understand the concept. It's almost impossible. Small triggers are inside of the large triggers. The scissors are closed. Rule number 1's not met. Commit to memory what it looks like to have your rules met, what it looks like to have your rules not met, so you get the patience to sit on your hands and do nothing. Clear path, terminations, entries. Guys, there's an entire section dedicated to the greatness that you guys have posted in this room. I've stolen it, and we've created a study guide for new users on NinjaTrader. Go back, look at it, look at the patterns, and what you'll notice is that it's the same thing over and over. It's strong triggers down, it's not hitting the area, and it's a pullback to an area inside of triggers. Rinse and repeat, ladies and gentlemen. It's just a pattern. And once you learn this pattern, you have everything you need to find success. This also talks about the management plan that's in the KISS plan for you, patterns that begin to repeat. There's a place to put your personal pictures so that you can begin building your trading plan. And then there's a trade tracking sheet, guys. And that trade tracking sheet is where you're going to track your progress. For my TradingView users, I had to learn TradingView just like you, guys. I'm not going to say new, but I haven't been doing TradingView for 6 years. But I'm telling you right now, the way to learn it is exactly the same. Get some rules, and since you don't have them yet, guess what? Here's your rules. Here's where you find what you're looking for on the 15-minute chart. Here's what the 1-minute chart does. Here's where entries come from, and checklists to take your great entries. As you burn those looks in your mind, here's my study. This is the high volume area trade straight from the checklist. Trend trades, momentum trades, ways to manage, no more longs, no more shorts, guys. Everything you need to burn these images in your mind. TradingView uses minute bars. Next, the NinjaTrader uses Renko bars. It's the same concept. It's momentum and path. It just looks a little different. So guys, if you are on TradingView, this is your spreadsheet. The TradingView, the TV plan that I'm putting in the room right now, that's your plan. Those are your instructions. That's your checklist for entry. If you're on NinjaTrader, these are your looks. Exactly what it looks like. And the KISS plan, that is your plan. So you have something to follow right now until you can get to where you want to be. So post in the room, practice these looks. Every picture doesn't have to be a trade. Sometimes it can just be reinforcement of a lesson. The final thing is use the trade tracking, guys. The trade tracking is on both spreadsheets. It's the last page, and this is where you can put pictures of what it is that you did. Good, bad, and ugly, guys. Win, lose, or draw. Put your picture in there. Annotate it. Talk about what you saw, why you did what you did. And every time you post it in the room, we'll get feedback. And that feedback is going to help you recognize not only the patterns that are great, but also the patterns in yourself that might be pulling some of that success out of you. Because that feedback might say, hey, you traded into a termination condition, and then I'm going to tell you how to avoid it. And then you did it again, and then you did it again, and then you did it again, and you can't for the life of you figure out why you can't win these trades. Guys, we have identified the challenge that's keeping you from success, and you will get lessons. So what you do is every morning, wake up, study what you did yesterday, guys. Put some time into it. It takes 3 to 5 minutes. What worked? Repeat it. What didn't work? Avoid it. What felt easy? The things that work feel pretty easy when you're full of advantages. The things that aren't easy, when you know you're without advantages, guys, you do get nervous. You do move stops. You do take profits where it just doesn't even make sense because you know you're not in the best situation. So a brief historical study will prepare you for the day, each and every day. So we're going to spend the whole day in the live market, guys, and we're going to point out advantages. We're going to talk about momentum. We're going to count triggers. And I want to give you guys this. This is your roadmap for entry. When each indicator on every chart agrees with the rules for the trade, when I have momentum, when my path is clear, when I can define an entry area, I'm in what's called a high probability trend trade, guys. This is the best of the best. This is a trade that you can prove wins more than it loses. This is the core for everybody because once you understand these advantages, you go to the next trade, guys. And the next trade is a medium probability trade. And a medium probability trade means most of your indicators agree with the rules. However, one issue exists. One advantage doesn't appear to be on your chart, whether it's momentum, whether it's clear path, whether it's entry area. And you can say to yourself, egads and little fishes, this is not a high probability scenario anymore. This is a medium probability scenario. I may have to manage a little more assertively, a little more aggressively. And you'll also be able to say, check this out. I don't have momentum. I don't have a clear path. 2 out of 3 of my advantages are gone. This is low probability and it's just not worth my money, my time, my effort, or my stress. I can choose not to enter the market. And guys, you are in control of the entry. You will never be in control of the market. These guys are in control of the market. These men and women are in control of the market. They create trends. They establish momentum. They react at areas. I want to go with the flow. This is the world's greatest lazy river. And if you try to fight it, you're going to wear out and get swept away. Your small chart shows those fighters. Your rules pinpoint where the fighters are most likely to lose. So you control the entry, whether or not you'd like to get in. Knowing what's working for you and against you lets you know whether you want to enter. It lets you know how assertively you should manage, guys. Remember that the only thing you will ever be in control of as a day trader is whether or not your rules are met. You can't will the market to bend to your needs. So, with all that said, welcome to Nexgen. Smalls are above the large. The large are beginning to open up. I'm starting to see momentum form. It's the very infancy. I've got room to go up, but I've got big, flat, lifeless triggers, and I don't have any areas inside of my triggers. Guys, I don't have what I need to feel comfortable following my plan. Everything is still down. Smalls are trying to break. We're below resistance. We're above support. Pulled right back to those areas. It overran a little bit. And now it's going down with a large chart. Guys, this is one of those times where maybe you take the trade, maybe it doesn't work out, maybe you take it a second time. That's a part of trading. The market's going to open any second now. We'll probably see a lot of movement. The current situation on crude oil is down. We can find a way to go down with it. All right, Victor, let's see what you said. Let me read the first section first. Would I take a buy trade with a red background on both charts? Victor, I am addicted to pills and drunk off my ass all the time. You better believe I would. Just kidding. I'm not really, but who cares what I would do? Your bank account has nothing to do with what I would do. You're struggling with that. Seems that when I see momentum on either direction, then a new divergence prints, which makes me stay put. So, Victor, you say this cyan divergence on the 5-1 chart can revert the market to the upside again? Can it really? So let's do this, Victor. Let's do this. Let me read everything. So at 5:31 a.m., at 5:31 a.m., the market went up, right? And it went right to a termination condition, and then it started back down. I don't care about 5:31 a.m. I'm done with that one. So let's live in the moment a little bit. Coming from a termination, smalls are breaking below the large. There's that momentum, right? You saying this cyan divergence is going to ruin your good time. So I'm going to go back to a very basic lesson, Victor. Very basic lesson. Let me go back to it. And we're going to just talk about where advantages are found. And we're going to talk about what those advantages mean. So, Victor, your large chart. This is your roadmap. This is your broad stroke. This is the opinion of the men and women that move the market. Guys, this is a great lesson. Direction is defined on the large chart. Momentum is defined on the large chart. The areas that can be problematic are defined on the large chart, guys. And you have to believe that it's your large chart advantages that make you look for a trade. Victor, the smalls aren't quite below, so the momentum isn't perfect. Does that make sense? Everything is down, but there's zero separation, which means that we have the threat of momentum, but it's not perfect. Is everybody with me on that? They're not quite below yet. The threat is there, but it's not separation, so it's not the best look. Victor, there's absolutely nothing in your way to the downside. And you are below everything above. So let's go through and let's go back to the very, very basics, Victor. I love these lessons. I love these questions. We're going to say momentum is a 50-50, right? We can see it accelerating, but there is no separation. Clear path is 100% without question. So when I go to my small chart, Victor, there is one thing that I worry about. One thing when it's perfect. Pull back to an area inside of triggers. That's it. If this is perfect, this is all that matters. But it's not perfect, is it? I don't have the momentum I need to believe that that market's going to scream down without hesitation. And it does. It pulls right back to areas inside, and they try to push down. But without that momentum behind it, Victor, they give one more push. And then the large chart takes over. Your recognition of momentum not being perfect, get your guard up and says, hey, it's not perfect. Let's see what happens. I don't understand how this works into the colors, though. Would I take a buy trade with a red background on both charts? I don't trade counter trend. So my answer is no, Victor. And I'm going to show you something. This is one of my favorite books that I've ever read in my life. How to Commit Financial Suicide. Trade against strong triggers. Trade in determination conditions. And Ron said it best, Victor. You can go counter trend. You can do whatever you want, my friend. But can we agree that everything on both charts says down? Does everybody see that? Give me a Y in the room if you see it. Everything on both charts says down. Without question, without hesitation. There is zero doubt in my mind. Triggers down, trend down, everything down, areas down, everything says down. And this one little retracement has me feeling like I want to go counter trend. This one little divergence has me feeling like I want to fight 73 things against me. So there's a path, right? Everything says up. I don't want to go down just because of this one pink line. Everything says down. I don't want to go up because of this one pink line. And Victor, let me show you what I mean. When everything says down, when the potential is break, do you know what this one divergence did for me? Do you want to know what it did for me? It was just enough lost momentum to get me to my perfect entry. And guys, this is one of the things why you have to remember where your rules are met. And I'm going to find an even cooler picture, guys, because this is the Mark Novak story when he was learning to trade the markets. The picture with the numbers was about the green move up. I don't see it over here, though. Where are you looking for a trade? Your picture's unclear. Where would you get in? Earlier to go up. Where? Because I can't see anything over here, Victor. You're asking me to use my imagination to see if there was a rule met to go up. Would I go long with a... See, and I think you're talking over here because this is what I see on your small chart. Does that make sense? You totally flim-flammed and bamboozled me here. You're talking about 5:30 in the morning, but you're showing me 9:15. So let's go back. Let's go to the live chart and see if we can get your lesson. That was crude oil, right? 5:30 a.m.? So that's where it reversed. I had fibs there. So everything says down. My triggers got through. I didn't have a fib, so I don't have a termination condition here. Eventually, it starts to go up. The fib prints. Now I have a termination condition. My small triggers roll up. Victor, it doesn't reach resistance yet, and it pulls right back to a mid-band inside of triggers, but it's not momentum. And you're saying, Mark, is there a way to capture this trade? I like it. I like your thought process. So Victor, in 2004, Nexgen started teaching, and I'm going to see if I can find it. In 2004, Nexgen started teaching a trade that was dependent on Fibonacci holding. So we're just going to use our imagination real quick and say that Fibonacci held. If my small triggers on my large chart turn from that no triggers through termination, Victor, what it's showing me is that the immediate momentum from a termination has changed direction. I can buy a pullback to those small triggers. What that pullback looks like is that right there. Is there a way to do it with a red background? Of course there is. But there's some things that need to happen before you have a fighting chance. Because if you try it here, you get your butt kicked. And if you try it here, you get your butt kicked. And if you try it here, you get your butt kicked. And if you try it here, you get your butt kicked. So there is a recipe. There is a checklist. Absolutely. Is there a time when I will go long with the background a different color? Well, here's my termination condition. There isn't. There is not strong triggers yet, Victor. And what you're doing is you're saying when you go counter trend, I sure as hell hope those little yellow dots stop this momentum. I sure hope these yellow dots stop that downtrend. I sure hope these yellow dots reverse the market. And Victor, that's a tough way to make a living. Let me show you one more picture. if those yellow dots are really going to stop the market, if those yellow dots are really going to change the whole direction of everything that's going on, your small chart is going to show that change, Victor. You're going to see large triggers roll from green to red. You're going to see the small triggers go from being outside to being inside. This is your small chart showing change that the large chart can't show you. So Victor, if you hope the market goes down at a line against everything, you're likely to get absolutely shellacked. If your small chart says, hey Victor, check it out. We're getting some divergences right at that key area. Our triggers are rolling right at that key area. And then your small chart gives an opportunity. This is where your range chart comes in, Victor. Do you see that pink line? With the triggers down, that's your entry. And it's close to the fib. And Victor, that's called a high volume area trade. And a high volume area trade, let me open it up. Let me go to the instructions. Is a way for you to capitalize on these amazing Fibonacci areas. What was that? That's weird. Let me reload that, see if I can get a real picture. There we go. So the high volume area trade is a way to capture these tops and bottoms. And let's go to it. We'll talk about it. I love it. But I want you to see something. And guys, this is a great lesson for my new users. When you learn the high probability trend trade, what had happened was, hold on. When you learn the high probability trend trade, what you're doing for yourself and the chart read that comes in is you're learning how to identify termination conditions, and that's a necessity, Victor, for the high volume area trade. You're learning to look at your trigger lines to recognize strength against you and then the advantage changing, and you're learning how to define an entry. Everything that you learn in the high probability trend trade takes you to the next trade. So this HVA trade, Victor, I love your questions. It starts with a good top or bottom. It starts with a no triggers through termination that reverses the market. So if your look on the large chart isn't this, price reaches an area and absolutely no triggers break it, Victor, you will never have your rules met for an HVA trade. Does that make sense? So if you didn't learn this, you're going to fudge the rules on the HVA trade. The HVA trade also says, where are my rules? I've got so much stuff here. Don't trade directly into termination conditions. So Victor, not only do you have to have that good top or bottom, you've got to make sure that there's nothing in your way from the trade that you want to take. So termination conditions not only show up in the entry or in the setting you up, but also when looking for an entry. And then finally, you are going to buy or sell a pullback to an area, an HVA line, and it should be at those trigger lines. So when you put it all together, Victor, first it's a termination, then your triggers roll, then you look for the opportunity. So the chart may still be green. And one of the things that you guys will notice, let me get there real quick. Victor, when I talk about rules and when I provide checklists, there is not one checklist that references color. Not one checklist that references color. You're struggling with a trade that you haven't learned yet. And that's all it is. But Victor, you understand momentum. You understand termination conditions. You're in a position where you could start looking for this trade. You could start saying to yourself, hey, you know what? And I'll show you exactly how it works. I can't go long anymore. Price reached resistance. None of my triggers broke through. My next trade is either the breaking of the area. I'll look for trend trades. Or it's the reversal from the area. I'll look for the HVA trade. Does that make sense? And Victor, that has been Nexgen's plan that I've been teaching for as long as Nexgen has been around. If a termination condition holds, I'll look for the HVA trade. If the HVA trade works, I'll look for the trend trade. If I reach my next area, I have to sit tight. It's either going to produce an HVA trade or it's going to break, and I go right back to the trend trade. Pretty cool, right? But everything you need to be successful with that, Victor, comes from the high volume area trend trade. So we're in that position right now. I have momentum down, but I don't have a clear path. So I have two options right now, guys. Either 65.89 breaks, I continue to look for trend trades, or everything rolls and my next trade becomes the high volume area trade. The high volume area trade that's going to be easy to recognize because of everything that I learned on the trend trade. Victor, outstanding question. Color has nothing to do with it. It's whether or not you have the rules met for a trade. So on the HVA trade, I'm not looking for momentum. You need a clear path up from a low or a clear path down from a high. You've got to let your small chart triggers roll, and then you'll define your entry at that HVA area. Yeah, George, we'll do it. I'll show it to you in TV as well. So on TradingView, let's use the spreadsheet. Guys, the spreadsheet is so much easier to burn these looks in your brain. So on an HVA, here's your checklist. Zone reached on the 15-minute chart. So George T, termination reached on the big chart. 1 minute small triggers turn and get to the other side of the large. That's letting you know that things are changing. Buy or sell a pullback to the HVA line. So that checklist is in the spreadsheet. So let's just click on one random. Zone holds. Triggers roll. Sell an HVA. Pretty cool, right? You could even look at it here. This is just the small chart. Zone holds. Triggers roll. Buy an HVA. Rinse and repeat. Let's do it again. This shows both charts. Here the zone holds. Do you guys see it? The market comes up, it reaches this red zone. You see it roll on the smaller, faster chart. Smalls get below the large. There's your pullback to the pink line, George. That's your cue to go short. Pretty cool, right? We can take advantage of areas that can stop the market and look for opportunities the other direction. But guys, I'm going to warn you, not warn you, maybe it's a warn, I don't know. It is counter trend. It is against the trend of the large chart. It will be against, did it set up here? Zone reached, triggers roll, pull back to the green HVA line and go up. I'll be damned. There it is live in the NASDAQ right now. Did it happen here? Zone reached. Don't have an HVA line there. Rules weren't met. Zone reached. Oh my goodness. Didn't get the pullback. So there's not always a trade. Not always a trade. And this is what is, so we've reached the zone. So guys, give me a why. Do you see that price reached yellow 1-to-1s and the triggers haven't broken? That's a termination condition. I want you to see what's happening on the smaller chart right at that termination condition. There's a bounce. So Victor, tell me that one little loss of momentum on a small chart isn't going to convince you to go long against momentum and everything down on the large. If it's really going to go up, these large triggers, Victor, are going to roll. Your small triggers are going to get above them. If that never happens, any long trade is just a recipe for financial suicide. Great question, man. It's just a pullback. That's all it is. It's a tiny little fight. Doing nothing. Indicators. Jose, have I given you this one yet? Hold on one second. Where'd it go? Ah, I lost my picture. Desktop, trading view. I love the lessons. Guys, get good at one trade before you try to find all the trades is typically the sound path. So smalls and large, Jose, man, they change colors sometimes. But I did them here. It's going to be just like Renko. Smalls and large look just like smalls and large. Where's my trading view? So for me, smalls are white down, blue up, right? They could be any color you wanted them to be. Make them so that they stand out. Large triggers are always going to be bigger, and these small triggers on a 15-minute chart are going to give you the immediate indication of what's going on. The small triggers, so on NinjaTrader, excuse me, everybody is accustomed to the idea that the only way you're in the good with momentum is, where is my odds favorable momentum picture? My goodness, there it is that the smalls are above, that the smalls are below. Guys, that's momentum on either platform. TradingView uses a 15-minute bar. And a 15-minute bar, guys, it's a slow bar. So this is one of the biggest differences between TradingView and NinjaTrader. So TradingView people, can you see that the strength is down? Smalls below the large, space between, odds favorable. Your brain should be screaming, I only want to go short. Does that make sense, all you TradingView folks? Good. Because fighting that is a recipe for financial suicide. But because of the speed of the chart, because it's such a slow-moving chart, this is what I go through every time. I look at the trend, and I say it's down. And I'm just going to cover this up real quick, and then I'll uncover it when I'm done. So the trend is down. The momentum is down. There's nothing in the way. And guys, there's three sides to these triggers. So you have to ask yourself, where is price? Where is the current price in relationship to these triggers? If price is to the left of the small triggers, you are on what I call the strong side of the triggers. The momentum is the highest. Short trades are going to be the easiest. This is where you see runners typically. If they are inside of the triggers, this is your transition point. This is where you're going to want to manage just a little bit more. If you are thinking about going counter trend from an area, at least being in the transition is going to help. Once you get to the right side, or what's really the wrong side of the triggers, the not left side, this is the weak side of the triggers. And this is where you really want to make sure that that small chart is in favor of a trade. So when I go to TradingView, it's the same thing every time. And we're just going to do the large chart. And I hope you guys can see this. If not, I'll make it bigger. And I go through that process. What color is the background? The background is down, right? Because it's red. And I have to have that in my brain. And I'm going to say, where are my smalls? Or what direction are my smalls? And they're up. Do you guys see that? So the smalls are up. This is that 15-minute bar, making change harder to see. So my smalls are up, and then I do this instantly. In my brain, I draw an imaginary line from the highest point of that trigger, and then I have to ask myself, where is price trading in relation to those up small triggers? And I'm on the strong side. Are you guys with me so far? Just because it's a downtrend, this is such a slow-moving chart, it doesn't mean you can't find a long. You want your small triggers up, that's going to make it easier. You want to be on the strong side if you're fighting trend, that's going to make it easier. And guys, the final thing that I ask myself, I say self, Is there anything in the way to screw up my long trade? And this is where I ask you guys, do you see that divergence high? That's my stop sign. That's the thing that says, hey, don't trade directly into it. Now, if I get a retracement and an opportunity to trade back to it, I may be able to do that. But if you are a couple ticks off of a stop sign on a large chart, guys, it's okay to hit the brakes. It's okay to say no more. But with the smalls up strong, on the strong side of the smalls, I'm looking for momentum trades over here. I'm looking for the market to pull through and break back to one-to-ones, break back to zones. It did it again here. I'm looking to buy HVA with strong triggers because I'm going with the overall trend. So your large chart, your 15-minute chart, man, it's a slow-moving chart. So we use these small triggers and we make sure that we're on the good side. Is that clear for everybody? That's one of the biggest differences between Renko and these minute charts. These minute charts take a little bit longer to see the change. So we can use the small triggers and our relationship to the small triggers to understand when the advantage is there. Good stuff. And it happens everywhere. The background is red, but the small triggers are up. I'm on the strong side of the small triggers. This is kind of a mess this morning, right? I'm only looking for long trades, but I have to make sure that there's nothing in the way to kill my good time. And there it is on both charts, guys. You can see it. When both charts have stuff in the way, life gets hard. All right, let's do some live chart reads, and then let's go look at some of the stuff that you guys are seeing. So Victor, they're still pushing down. No reason to go long because of that one divergence. Does that make sense? And there's kind of the lesson. If it's really going to go up, these triggers are going to roll. Going back to your explanation, and something that has been stopping me from entering trades is where I see a number on the large chart, like for example, 123%, but no divergence printed yet. I anticipated the divergence to be printed, and it paralyzes me. I love that you're sharing this. I should pay attention to that number after the actual divergence is printed. So check it out. This divergence line, Victor, let's make it huge. So the market has to go up, and the market has to come down. This divergence is printed, Victor, right here, about 2.5 bars down. That's when that line finally forms on a large chart. So I didn't know about divergence here until here. That looks like it was approximately 7 or 8 minutes on a large chart. The way we're going to use divergence on the large chart, Victor, don't care about this printing. Has no bearing on anything. It happens too far down in the move. But when price comes back to that divergence and my triggers don't break, Victor, that's when this divergence becomes impactful. Does that make sense? Because in the moments, I've got the potential for divergence. It's just potential. That's all it is. In the moment, Victor, I have the potential for divergence here. It's just potential. And I'm going to tell you, I probably had the divergence for potential all the way down. Until it's true, it's just potential. This market could go down another 500 points and have potential divergence all the way down. It's just potential. How do I use it? So if I'm looking for a trade, Victor, and I say, I can't take this short trade, assuming my rules are met, if divergence is true, well then now I know divergence is there. I know the potential is there for divergence. So if it becomes true, I'll cancel my order. Does that make sense? That's one way you can use the potential. So let's watch it. Right now it's only potential. I need one more bar up before it could ever become true. If I get a down bar, it resets. We'll see what happens. Let's see if we can find a more active look. All right. This divergence didn't matter until it was reached again. That's pretty cool. This divergence lets me know there was a loss of momentum, but it doesn't mean much to me unless they come back to it. And then, of course, in the moment, we don't have divergence potential. Still just potential. So hopefully we get a little movement here. If I get one more bar and then halfway through the next, that's when I'll know if this is true or not. John Novak used to teach this room, and he used to say, the potential for a plane to crash through your roof and kill you today is real. If planes fly over your house, guys, it could happen. You can't live your life in fear that that might happen, right, Victor? You might walk out the front door and a dog bites you, but you don't stop walking out your front door. You go on with life because life is giving you what you need to be successful. They're making decisions right at a key area, guys. Does that help, Victor? I hope that was helpful. I'm going to click on a couple charts that you guys have posted. Andy getting us going. Guys, I want you to see what Andy did here. This is pretty awesome. Everything on Andy's chart says down. So Andy's first read is, man, it's going down. Andy recognizes trouble and he goes, whew. Not only is trouble creating problems for any short trades, my small triggers are beginning to roll up. And Andy, did you do this? When those small triggers roll up from trouble, Andy draws an imaginary line in his brain and he says, I'm on the strong side of small triggers that are up. TradingView users, do you see the look? The small triggers are up. We're left of them, therefore we're on the strong side. There's nothing in the way to mess up our good time. So what Andy did is Andy said, with strong small over here, and now with strong small over here, I'm going to get in above trouble, and I'm going to hold it to trouble. And he just rides momentum. And it just rides momentum. And no, Victor, who cares if others already know this? They're not knocking on your door giving you lessons, are they? I love all of you in this room. Guys, be selfish with your time in this room. Ask every question that you have. And Paul's right. Ask away. And if people know it, it's a great review. Guys, Andy uses the strong side of small triggers that are up. Everything is strong here. He gets in above trouble. He gets out at trouble. Andy is creating the chili dog trade on TradingView. And if it's really going up, Victor, it's going to roll. There's your example. We saw the divergence. We saw a second divergence. If it's really going up, Victor, it's going to roll. That's one of the best lessons you can ever get. And until it rolls, don't let your brain think anything but short. Andy, great trade. Victor, great lessons this morning. Thank you for having the courage to post and ask, man. That's how you get to where you want to be. That's exactly how you get to where you want to be. New knowledge for today. These chart prime indicator areas print in different levels depending on if I use 1 minute, 3 minute, 5 minute. Of course they do. Because, Andy, these levels are dependent on the moves on your chart. So if you guys start changing charts, you're going to get different levels. It's the same reason why you may not have the same levels on your 15 minute that you do on your 1 minute. All right, guys. Steve Diego giving us the momentum and path. Ron got to run. Going to VA for daughter's birthday. Man, I hope you have a good time. I will help yourself in your honor. My son flies into Spokane this afternoon. He'll heckle me for you. So I hope you have a great weekend with your daughter. We'll see you Monday or Tuesday or Wednesday. See you Wednesday. Take care, Ron. All right, guys, I want you to see how you will find a way to capitalize on momentum and path once you learn those basic lessons. Strong triggers. Nothing in the way. Strong triggers. Steve jumps in. Just jumps in. Jumps the fudge in. Everything is up and strong. I'm going to go up with it. And he knows that momentum is fleeting. So he takes about 110 per contract. And in a couple seconds, has about a $225 trade. Because he understands momentum and path, he found a way to capitalize. Thank you, Ron, for the chili dog trade. Guys, you're going to see a lot of these in the room. This is not a next-gen trade. This is a trade that was developed by Ron C., who's leaving the room right now. And he did it because he learned how to identify strong triggers, and he recognized and understood and believed that the people in charge reacted areas. And the whole idea behind it is let them get away from the reaction point with all that momentum, and you'll find a way to capitalize. This is how most of you trend traders learn the second trade. That's what fills the time in between the trend trades for a lot of you. Steve Diego, outstanding trade. Nicely done. Momentum and path, guys. You're going to see it. Boaz. Boaz says, let's see where we're at. 13.2, you're trading the NASDAQ. Strong triggers. Potential to break. No areas inside of triggers. Don't know if the market's going to stop. Boaz, you get in and you get stopped out. So we're going to talk about this trade real quick, guys. And we're going to go through it. And I'm going to give you guys the keys to the kingdom on potential to break. Have a wonderful day, Mrs. Novak.
You too. Hi, guys.
Jenny says hi, everybody. All right. Boaz, are you still in the room? NinjaTrader users, this lesson is gold. Smalls below the large. Can we all agree in the room? Give me a Y if you see it. His large chart absolutely positively has momentum. There's no doubt in my mind. This is a look that says the odds are favorable for the market to push down. Make sense? Two triggers through, maybe three triggers through. Without four triggers through the problem areas, guys, the path isn't clear. But the potential is there based on momentum. Are you guys with the lesson so far? He has three triggers through. And only three triggers lets me know that it's not the perfect short trade yet. It could never be high probability, because high probability means that I have all three. What does that mean? That means that Boaz either has to not take the trade, or he has to let his small chart give him some advantages to take the trade. And we're going to look at a couple different things that happen. The entry rules, and Boaz, something's wrong with your chart, by the way, because your synthetics shouldn't be this low. Because your synthetic triggers are these large triggers, which means that your synthetics should have been somewhere up here. You're going to want to reload your template. So that's the first thing I notice. This is a good reason to post in the room too, guys. I'll notice if your charts aren't doing what they should. But let's go through the entry language, Boaz. So sell a pullback, right? You got a pullback at an area inside of triggers. I firmly believe with all of my heart that if you guys say this, Every time you look for an entry, it's going to keep you out of a lot of losers. It's going to keep you out of a lot of troubles. So let's take a look. There's my triggers. There's my area. So on the very basic, I don't have it. I don't have a pullback to an area inside of triggers. I have one advantage going for me in this trade, and it's the advantage of momentum. Does that make sense, everybody? If I did have an area inside of triggers, if your chart was correct, Boaz, divergence is the #1 killer when it's only potential. Divergence on a small chart is the #1 killer of the potential to break. 2 divergences is the absolute kiss of death. If the market's really going to go down, you're probably not going to see all this change, right? So Boaz, what you did is you took a low probability trade based on your chart, and it started giving you some indication that this was more likely to fail or at least push up beyond. Does that make sense? And I know that you see the HVA and the fibs, so you took a calculated shot. But because it's only the potential, that divergence is the biggest killer. They wanted that fib, ladies and gentlemen. And I want to do this on some potential to break trades. We did this yesterday, and it was pretty crazy how many times it rang true. So this one only had the potential to break. I'm going to put a box around it. And we may not have gotten a lot here. This one only had the potential. This one only had the potential. Does everybody see what I'm doing? I'm taking a look where 2 triggers get through the area. And I want to go see what the small chart looked like at those areas with the potential to break. Because I want to do a study to see if I'm really willing to take a trade with the potential to break. This one didn't have the divergence, so we're 0 for 1. This one didn't have triggers that agree. This one had divergence. This one had huge risk. This one had multiple divergences. This one had divergence. Over and over, guys. So divergence is the biggest killer. The biggest killer of that potential to break look. So I like to point that out because it takes a while to believe it. Nobody wants to not be in the market, guys. All of you believe that you're never going to get paid if you're not in the market all the time. The reality is, all you got to do is wait for the best. Strong triggers, price gets away from the decision-making zone, jump the fudge in, get out before things get bad. Steve Diego, 2 for 2. Absolutely beautiful. Now for my trading view people, let's take a look at it. Andy, if you spread this out for me just a little bit, it really will make my life a little easier to read it. I love your small chart is so easy to read. Your large chart is difficult. Ridiculously long rejection. So where are we at? The trend is up. The small triggers are down. The large triggers are up. You're on the weak side of the small triggers. You're not getting a lot of help for longs on this chart. Odds favorable, momentum down. Everything says down. Wrong side, down, down, down. Andy, you went long. I'm glad you got paid. I'm glad you got paid. Large triggers are at the edge. I would say large triggers are below the edge. It's a tough look. I'm glad you got paid, Andy. I can't see anything on the large chart that says longs are going to be easy. I can't see anything on a small chart that says longs are going to be easy. So I'm thankful that the trading gods were on your side today. And Andy, you've got a little different plan than I understand, so there's probably something that you saw. They're just starting to turn. Hold on. Smalls below the large. We can agree that that's odds favorable momentum to the downside, right, Andy? Strong triggers. And there's nothing in the way to stop it. And the small triggers are down here. And I'm on the strong side of small triggers here. Andy, these triggers will dance, right? You're going to think that they're going up. There's no indication that they're going up. Not at all, I'm afraid, here. Now, over here, they actually do start to go up. So sometimes we get away with one. Strong trending market. Path is clear. Pull back to support, not inside of triggers, and it works out great, Boaz. You may want to right-click on your small chart, Boaz. Go to Templates and load in that Nexgen 13.2 Dynamic Renko bar. Get your synthetics back where they belong. That's a great-looking trade because I know where your synthetics belong. But they're working against you a little bit right now. Steve, hope everything goes well. Have a great afternoon. Everything says down on my crude oil chart. Do you guys see it? Smalls are down. Large are down. But I don't have a clear path. Ollie, show me a picture. Show me a picture. My imagination is way too wild. I start picturing divergence and then it just turns into bikini girls. I can't keep up with it. That's a whole bunch of down. All right. Rule number 2 for the win again. Do you guys see it? Holy smokes. Resistance held. Resistance and divergence high held. Resistance and divergence high held. The trend is up. The large are up. The smalls are above the large. Can anybody at a glance recognize an area that could screw up your good time for a long trade? Does anybody see it other than me? That's an awful lot telling you to just sit on your hands, isn't it? Look what happened when the market was clear of it. Guys, rule number 2 is going to keep you out of trouble. Rule number 2 is going to save your bacon. Rule number 2 is going to keep you out of more losers than it puts you in. Pete. Good top, strong triggers. Everything says down. Smalls are starting to break through. So Pete says, I don't have a clear path. I've still got momentum. I can define an entry 2 out of 3. I'll take the trade and I'll manage out of trouble. Nice trade, Pete. Using those very basic concepts. Smalls are still outside of the large. 3 triggers through. Well-defined entry. Manage aggressively because it's not perfect. Nicely done, Pete. Victor, this look, price hitting fibs at 65.55 on large chart. Small chart shows pullback. Where does the small chart show a pullback? Either this reverses where I can look for an HVA trade, or it breaks the fib and keeps going down. I like it. If it changes direction to go up, there's nothing in its path except 1-to-1s in a fib until 65.50. Where's 65.50? Oh, that's below you. Small chart shows move down right to Fibonacci and divergence, which should be a termination condition. All right, so Victor, where do we define termination conditions? Let's go through it again. I love this. Repetition creates recognition. A trade is momentum. Victor, do you have momentum? No. A trade is a clear path. Are 4 triggers through the area? No. A trade is a pullback to an area inside of triggers. There's your pullback. There's your pullback. There's your potential pullback. Garbage, garbage, garbage. Don't even look at this chart when you don't have momentum and a clear path. seems like it wants to keep going down. I love that you're in touch with the feelings of the market, Victor, but didn't it seem like it wanted to keep going up here? And didn't it seem like it wanted to keep going up here? And it seemed like it wanted to keep going down there. And it definitely seemed like it wanted to keep going up there. And it definitely, look at the momentum, Victor. It seemed like it wanted to go down there. But my indicator said, don't freaking do it. It may break, Victor. But until it does, I just don't care. I can't go long with this look. I can't go short with this look. Guys, if you have bagels in your pantry, go toast one. If you have waffles in your freezer, go toast one. If you need to refill your coffee, do it. Victor, if it's going to go up, these triggers will roll. And I know it seems weird, right? How can Mark sit in front of a room and say there's nothing to do for 3 hours? How does anybody make money? Guys, has anybody never gotten a rules met trade in a day? Has anyone sat in front of the market? Fix the schmear. Has anyone sat in the market all day long and not gotten a rules-based trade? I haven't. It hasn't happened to me yet. Not yet. Going to refresh the coffee. I love it. All right, Ollie. Ollie. I want to make sure that I understood your question, Ollie. Do we need to consider divergence on a pullback if all triggers clear trouble on the large chart? So, Ollie, assuming I have momentum and path, and make sure that I'm answering your question correctly, please. If everything is perfect here, do I worry about that? Is that the question? I just want to make sure. If everything is perfect on my large chart, do I worry about this divergence? I'm going to answer that in 2 parts and maybe with a little interpretive dance as well. So we're going to do a couple things, Ollie. And I want you to, everybody, accept this lesson, not as a, hey, you're reading it wrong, but accept this lesson as a, let's not forget where the rules are met. So, Ollie, if I have strong triggers on my small chart, on my large chart, if I have a clear path on my large chart, this large chart defines the goodness in the market. This large chart tells me without question that this is a market that's likely to go down. This is a market with absolutely nothing in the way. This is a market where life is so outstanding, I can't wait to take a short trade. Does that make sense? And I want you guys to feel that way. I want you to get excited. I want you screaming momentum and path at the top of your lungs. I want your pets to know when those advantages are in place because you make so much noise. So, Ollie, and I love this question, guys, and I give this lesson 1,000 times a year because it's such a common question. If my large chart is perfect, can one tiny little insignificant loss of momentum override all of the momentum on the large chart? I say no, Ollie. I say if my large chart has momentum and path, if my rules are met, hold on. If my rules are met, I'm going to take that trade. And if I get one little divergence on the small chart, it doesn't faze me. If I've got a line, maybe 1-to-1s on a small chart, it doesn't faze me. And what had happened was this line, Ollie, is everything that I could ever hope for to get me to my perfect entry. It creates a little bit of a bounce to send me off back in the direction of the large chart. This little divergence is all I could ever hope for to get me back to my perfect entry when the large chart takes back over. Does that make sense? These small triggers rolling against me is the loss of momentum I need to continue with all those advantages on the large chart. So, Ollie, I made a career for probably a couple months until I had the courage to ask the question that you just asked. I would stay out of this trade because of divergence. I would stay out of this trade because of those yellow 1-to-1s. I would stay out of a trade because of 2 divergences when everything was perfect. So we're going to go to a quick little picture in the instructions here. The only time, my friend, I will ever not enter the trade when I have momentum and path, when those core rules are met, is going to termination conditions, scrolling down. We're scrolling. Come on, pictures. There it is. 3 divergences in the same price range, guys. 3 divergences, whether you're on TradingView, whether you're on NinjaTrader. 3 divergences in the same price range may terminate a trend. So, Ollie, if I am working with momentum, if my path is clear, I'm taking this trade. If I have momentum, if my path is clear, I'm taking this trade. If I have momentum, if my path is clear, this third divergence says, Mark, pump the brakes. The small crowd showed up to ruin your good time. They stole momentum 3 times. I'm taking it. I'm leaving it. Does that make sense, Ollie? Remember where your advantages are met. It's hard to in the moment because that small chart moves a lot. 3 of them. If I have weak triggers, that lesson from rule number 1, it's more likely to kill my good time. If the third one's higher, it's even more likely. So when my life is amazing, when my triggers are strong, when my path is clear, can we find one? Let's do this real quick. Oops, cancel. I'm going to take off my synthetics just to create a little cheat. There we go. Let's put a box around that one at 3:46 in the morning, and let's back up to it. There we go. If I have strong triggers, if my path is clear, this yellow 1-to-1 pushes me right back. It's perfect. This divergence still keeps me in the range. So remember that large chart advantages are the reason why. Large chart advantages are why we're looking, right? And let me get my fibs back on there. Because your large chart will define the direction you should be going. The large chart will define whether or not you have momentum. And the large chart will define the areas that could absolutely destroy your good time. And check it out, Victor. So they're trying, right? Now the smalls are starting to roll. I'm seeing the effects, but it's still too soon. It's still too soon. TradingView, let's look at it. This is the S&P. The trend is up. I like that. That's easy to see with a green background. Price is on the strong side of the triggers. I like that. That means that the longs are more likely. But I'm directly into this divergence high. And that divergence high is already held once, twice, 3 times. And what does my small chart say? My small chart says they tried and failed. They tried and failed. They tried and failed. Does it behoove me to trade directly into it? Probably not. Does that make sense, everybody? If my large chart says don't do it, my small chart's going to try to talk me into some stuff. Now let me show you a different thought process. These are big slow bars. I'm on the strong side. Everything says up. If I take an entry at a mid-band with a close on the correct side of the triggers, if I take an entry at a zone with a close on the correct side of the triggers to get back to trouble with those advantages, does it make sense? This is one of the differences between minute bars and Renko bars. I may be able to go back and test that large chart. I may be able to go back if my rules are met to get back to trouble, and there's a lot of possibilities from the strong side of triggers inside of this range, and that takes a little bit, especially if your brain has been looking at Renko bars for a while. Smalls are up, trend is up, strong side of smalls. Do you guys see how the zone held? How they tried and failed? If I'm looking for a long trade, I need to be above this zone. I need to pull back to this zone, and I need it to match some rules over here on my small chart. It's easy to get excited, guys. The struggle is real. The struggle is real. And until we get above this zone, it just changed colors. Pretty cool. I didn't do that. Until we get price above this problem, guys, you're not going to find the easiest trades that you've ever had. This zone right here is this zone right here. And until price gets above it and maybe pulls back to it, I just don't have a fighting chance. Crude oil says down. I'm on the weak side of down triggers. That's my read every time. Triggers down, trend down. Where is price? Price is on the weak side of triggers. What does the 1 minute chart say? The 1 minute chart is showing change that says, dude, why on earth would you go short from the weak side of triggers against momentum? Wait for a deeper pullback. Wait for a close on the correct side before you try to go down with that trend and momentum. Does that make sense, guys? Patience piece. Weak side of triggers, don't fight the small chart. This is your immediate chart. This is your momentum chart. If you were looking for a short trade, that close on the correct side of the small triggers, that was your opportunity. Right from the zone, sending you in the direction of the trend, in the direction of the momentum. Doesn't guarantee a winner, but it sure seems to be working. Small chart patience, big chart picture. Pretty cool, right? Hopefully some of you are a couple $100 richer now, straight to trouble. That's your look. Small chart says wait, patience, pause, don't go. All right, we're on the good side of the small triggers. Giddy the F up. And down it goes. I love it. Patience, guys. It takes a while to set something up. It takes a little bit to get those advantages, right? But when they come, life is pretty easy. Dang it, Victor, they still haven't rolled or broken. Paul, I'm a huge fan of the trading view because minute charts slow you down. Minute charts create patience. They really do. Renko gives some 32 flavors of awesome in the moment, call it to the tick accuracy. I love Renko charts. I am a get in early trader. That's my challenge. I get in early. One's not better than the other, but there's definitely two personalities. I love Renko charts. I've been trading Renko charts for years. Hey, John, have a great weekend, man. Renko charts give me the in the now, right? Boom. Let's circle 15 minutes worth of bars real quick. That's all Renko. That's probably, I don't know. It depends on the speed of the market. You might get 7 or 8 bars inside of a 15-minute bar. Guys, one's not better than the other. One's not the next thing. It's just a matter of, it's a different look. It's a different plan. It's a different. If you go through and you have a checklist, if you're on NinjaTrader, there's your checklists. If you're on TradingView, There's your checklist. If you focus on the checklist, if you focus on the advantages, if you focus on not trading into things that could stop the market, if you focus on having momentum to push the market, it doesn't matter which platform you're on. Guys, look, they still haven't broken above the area. You knew about it. It's the same darn thing that we're looking at on every chart, guys. Not yet. Not yet. It's not good yet. You're not where you need to be yet. Just calm it. No, 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 no. But Mark, I really want to be in a trade. Well, that's your right. Everything says down. The path is clear. 1 minute says patience, 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 patience. There's your entry. And you are still getting paid to the downside. Gold, strong side is small, below all the trouble. 1 minute says calm it, don't do it, not yet. Wait for an area and a close below. I make it sound easy, right? I make it sound like I've been doing this my whole life. Guys, I haven't. I wish I had. I'd probably be in a different spot in life. Not that my spot is bad, but it all started with how do I define momentum? And once I understood momentum, how do I recognize a termination condition? And once I recognize termination conditions, how do I find a way to capitalize? Where's my entry? And guys, this is repeatable. It's testable. You can do it over and over. And Victor, way to make my favorite people's list. I love the dogs. Look at him. He's like, dude, Victor, stop going counter trend, brother. ES said you're not going to move today. What great looking dogs, Victor. I love it when you guys post pictures of your puppies in the room. Rinko makes it smooth, but it also makes it fast. How are we doing so far today, guys? I'm trying to go back and forth between the live markets. I'm trying to go back and forth. Look at that. 3 triggers through. Uh-oh. No divergence. Pull back to an area inside of triggers and dag nabbit. I missed it. Morgan, you got it? This is why I don't trade my real accounts. Let's see if it fits rules. Hold on. Momentum? Absolutely. Clear path? Not yet. Potential? Potential. Entry area? Without question. Do you guys see it? Momentum? Potential? Perfect entry. And then what is missing that kills these trades more often than not? I have no divergence. I have strong triggers. I love it. But because it's only the potential, Victor, if this divergence becomes true, my plan, the KISS plan, says that I have to exit. Yeah, Morgan, that's all it needed. It needed you to believe it wasn't going to do anything, and then it did something. Victor, are you still in here? That's what this negative number tells me. It says, hey, Mark, there's the potential for divergence, and your rules say if divergence prints on the potential to break, that's an exit condition. So now I know about it. I'm aware of it, and I may need to manage this trade. If the divergence is never true, guess what? I don't have anything in the way until 64.18. And I have momentum that says the market is likely to go up. And I had an entry where I pinpointed, I mean, son of a gun, damn near to the tick, where that market was most likely to bounce and continue with all of that momentum and the potential to break. If you are new with me and you're on NinjaTrader, this is your trade. This is the one that says, let's figure out how to get paid. Your entry was right at about 64.10 and a quarter. $100 profits were taken at 12 and a quarter. You went break even. And now you're waiting to see, will the market go up or will divergence push it back down and maybe ruin my good time? When you know why you'll enter a trade, it takes the stress out. When you know why you'll exit a trade, it takes the stress out. That's what your plan does for you. Victor, these sons of guns are still not through that area. So what do we see? Let's check this out. I don't have the momentum that I need to feel like it's just going to break, right? I don't have all my triggers through. This chart says, whoa, stop, wait, pause, don't, not your best, may not, don't think so, don't believe in it, not going to waste my money. That's what this chart says to me. My small chart says, right at this key area, some buyers are testing the water. I see it in divergence. Right at that same area, the buyers are testing it again to see what the reaction from the sellers who've been in control is. I can see that the buyers are showing up. I see it because my large triggers are rolling. I see it because my small triggers are up above. I see it because things are starting to change. But it's still just a little bit. Second bounce, will a third develop? I don't know, Andy. I don't know. Will the Cubs win the pennant again? Hell, I don't know. 3 divergences would be a pretty good indication, right? That things may go up a little further, but everything still says down. So what's that rule? If the smalls roll from here, they didn't make it through, the large didn't make it through. If the smalls rolled right now, Victor, Nexgen taught a trade that says if these large triggers roll up, if these small triggers roll up, I could buy a pullback to them. That's not going to happen until somewhere over here in the future. I'm predicting, if my rules are met, where my trade is going to happen. And it's going to be somewhere off in the distance. It's going to be somewhere nowhere near what's happening now, because these triggers have to roll and they have to point up. Does that make sense? I'm in a pause situation. I'm in a hold situation. And Victor, what happens if it goes crashing through the areas? I go right back to trend trading. So we're definitely if then. I'm not any more excited about a long trade than I am about a short trade. I'm not any more married to a long trade than I am a short trade. You know what I'm married to? Here we go. Oh, he's going to say it again. I'm married to my rules being met. I'm married to having a plan that provides more wins than losses, guys. I am married to having an edge every time I take a trade. Morgan said, check it out, Mark. Odds favorable momentum, potential to break, second higher divergence is a great look. 3 triggers through, no divergence. Scared, fearful entry, Morgan. But still a nice entry. And money made. Nicely done. What's the difference between getting in at 11 and getting in at 10? $50 a contract. The correct entry is $100 more in your account. Does that make sense? Great trade. And out at potential trouble. Potential trouble. Did that trouble manifest into actual trouble? Not yet. Victor, do you see how that potential divergence is still there? And it never transpired on this bar. Morgan chose to get paid at something that could create a bounce. That's good strategy on a medium probability trade. I love it. Great job. Wow, it's 10:43. Tell you what, guys, I'm going to take a couple minutes. Whew! When I come back, we'll play on TradingView a little bit more. I know it's been kind of heavy on Rinko, and I know that I've got TradingView people in here. We'll go through. Guys, the reads are the same no matter what. Smalls are up in the transition, And those sons of guns spiked all the way up to the zone and spiked all the way down. I'm still above trouble here. My small triggers are down. If I were going to take a trade, it needed to be from the good side of those small triggers. I've got a lot of stuff in the way that could mess up my good time. Strong side of the smalls, above all the trouble. This zone said, calm it. Let's get above it rather than hoping it breaks. Let's get above it and pull back to it. Does that make sense, everybody? If we pull above this zone with strong triggers and snap back to it, I've got nothing but goodness all the way up to that next area. I've got nothing but goodness all the way up to that next area. I hope it breaks. I want it to break. I wish it would break. It hasn't broken. Why won't it break? Egads and little fishes, they're trying, but it's not broken. This is a prairie dog. He's peeking his head above. Let's force an actual break. Let's get some strong triggers before taking a shot at it. All right, guys. I'll leave you guys with it. We'll see what it does. I'll be back in about 3 or 4 minutes, and we'll finish strong today. Back in a few. That zone came in, right? But look at the large chart. Strong triggers, strong side of the triggers, nothing in the way. Maybe this area will give me enough of a bounce to pull back to this zone with strong triggers. Because of the zone, it's a little harder. Do I have enough room from 14 to 1475 to feel like it's worth risking the money? You have to be able to answer that. My smalls are inside of my large, not the best momentum. I'm back. I am back. Is there a reason why this system has not been automated? I would think a robot or EA algorithm could be built around the rules and advantages which are solid to take the trades on the basic safe side. Maybe this is a question for John Novak. So Victor, people have been automating trade systems for 30 or 40 years. Have you looked for automated systems yet? Have you done any search for it? one of the problems with automated systems is once the rules are built, right? So once the rules are built, what happens is it's hard to weed out variations. John Novak and I have been working on an automated system with his programmers for the last 8 months. Um, and it's based on a high probability trend trade. It's based on the best of the best. And there are an infinite number of variations. And we're going through it and we're talking about it and we're looking at it and we're testing it and we're beating it and we're doing all these things. And it's a lot of fun. I'm not going to lie. It's a good time. But it's not for you guys. Because if we build the perfect automated system, it's going to be for people whose last name is Novak or Dean. We teach you to read indicators. We give you everything that you need, right? So yeah, John's been building automated systems forever. But there's too many variables. And there's too much that could happen, too many things that could change. It's easier, not easier, but I would say it's more effective because I've been watching this forever. It's more effective to look at a chart, Victor, and to say, I have momentum. The potential to break is there. Let me buy a pullback to an area inside of triggers. Do you guys see how there was never a reason to exit? Never got divergence, never got a bounce. Victor, automation takes this chart read out of your hands, right? And automation might say that this one-to-one is problematic. And automation might say that these red triggers are problematic. And automation might say that there's not enough space between these two here. And automation might say, well, it went a tick below the area to bounce. And it's weird how many things you have to write into it. Guys, I have momentum. I have absolutely nothing in the way. And I have an area inside of triggers. Does this fit the rules? What do you think? All right. So if it fits the rules, Hunter, I agree. My obligation as a rules-based trader, my obligation as a trader with a plan that I've proven wins more than it loses, is to take that trade. Now, Hunter, does it guarantee a win if I take that trade? No. This is a plan that typically wins 70 to 80% of the time. So I'm obligated to lose 20 to 30% of them, and I might. But here's the cool thing. If I get the entry, my stop, this is the KISS plan, goes 4 to 5 ticks below these large triggers. Because 4 to 5 ticks below these large triggers, my advantage from entry is no longer in play. Am I worried about divergence? Ollie, I have strong triggers and a clear path. One divergence doesn't freak me out. Hopefully that one divergence gets me back to an area inside of triggers. If it does, then my stop will be 4 to 5 ticks below the triggers. I won't touch my stop or adjust my profit targets until I get a reversal bar in the direction of the trade. I know this because it's all spelled out black and white on the trading plan that I'm married to. Now, the thing I can't control is whether or not I get an entry. The thing that I can't control is whether or not they're capable of pushing down to that area inside of triggers. If my reversal bar that starts the pullback is below those one-to-ones, those one-to-ones didn't create the bounce in the direction of the trend that I was looking for. So I look for the lower area. Does that make sense? You guys see how they're stuck right here? They're fluctuating up, they're going down. There's indecision. They don't know what they want to do. Because decisions are made at lines, guys. Hopefully they come and make a decision at this line that they'd rather go with the large chart. And if they do, it's more likely to go up to 64.18. So we're going to sit this one. We're going to wait. We're going to see. It either gets us or it doesn't, guys. It either is or it isn't. This is the S&P, Victor. Absolutely. So while we're waiting, let's just Oh, look at that, Victor. Small triggers rolled from a termination. Oh, man. So I need a pullback back to these small triggers. That's not going to happen. I wish I would have left my box there because it's right in the right spot. That's not going to happen till down here, if it happens at all. I need these small triggers to go up. Does that make sense, Victor? I need these to go up. I need to see some green. Because until they do, this market's still more likely to go down than up. But that's how small chart shows some change. Do you have a range chart built? Let me build one real quick. We'll see if there's an HVA line there. New chart. Is this crude oil? Crude oil. Almost there, almost there. Range. See, Victor, you don't have an HVA line. Well, actually, nope, that's a pink one. So you don't have a green HVA line, Victor. So the rules aren't met for an HVA trade. They can't be if you don't have a green HVA line. Crazy, right? And those aren't up. Yours are, so Andy, they're dancing, right? But they're not up yet. And sure enough, they're pushing down with the large chart advantages. Still didn't get us. We got to teach lessons and we still didn't get entered. Ollie, 3 triggers, no divergence, beautiful entry, all the money. Beautiful, Ollie. It doesn't have to be difficult, does it? How long did we have to wait for that super easy money-making trade? Couple hours. 90% of your day is doing nothing. 90% of your day is waiting for advantages. 90% of your day is wishing the market would just give you what the market needs to give you to have a trade. I don't have any rules met over here. I'm just saying, on my chart, I can't find anything that fits any plans. So I have to sit still. I have to wait. They keep flirting with me here. There it is. If I get an entry in an area inside of triggers, 1, 2, 3, 4, 5, then my stop is where the market shouldn't go. My first target's at $100. My second target's at $100. Nothing for me to do until I either get a reversal bar or I get stopped out. Guys, I will take this trade rain or shine, hell or high water, because it fits my plan. I have strong triggers. My path is clear. The market pulled back to an area inside of triggers. My first target is $100, guys. Whoa, that was sneaky. Did you see how fast that happened? Whew. Glad I put my stop where the market shouldn't go. Still not going to guarantee me a winner, but so far everything seems to be okay. Large chart still says up. Large chart still has path. Really want to see that small chart going up, but I'm not in control of that. The only thing I'm in control of is whether or not my rules are met, and so far they are. If I get a reversal bar, normally I would reduce my risk behind it, but my risk is already behind it. So nothing to do until I hit my first target or get stopped out. That's what the KISS plan says. It either goes up and hits a target or it doesn't. I'm not in control. John Novak used to always say, I don't care if I get stopped out. This is a pattern that wins more than it loses. I don't care if I get stopped out. This one doesn't win all the time, but it wins more than it doesn't. And there it is. Low freaking tick. Those sons of guns. If it goes up from here, that's going to be funny. I think I was 4 ticks, not 5 ticks. Maybe 5 would have been better. Should we just for grins? Watch this. We'll take it. We'll retake it. And we'll do 5 ticks. Just to see if my stop was wrong. It might have been. I say 4 to 5. I went 4. Maybe it should have been 5. Maybe they're still going to come stop me out again. I don't know. But now the sellers failed. They're on their way back up. We'll see what happens. Guys, I'm on simulator and I'm learning how to trust. I'm learning how to trust momentum. I'm learning how to identify entries. I'm learning how to work a mechanical management plan. The results are not important right now. What's important is whether or not I'm learning the looks, whether or not I'm learning to follow the rules. No trade set up. Pulls back to a mid-band with everything up. Guys, the trading view rules say I need a close on the correct side of small triggers at a mid-band for a trend trade. And I was looking on the range chart for an HVA line. So on my range chart, I would have needed a green line somewhere right here, Victor. I don't have it. And because I don't have it, I don't have an HVA trade. Does that make sense? And we'll come back. We'll see what happens with it. Yeah, guys, my stop was a little tight. Low ticked. If your rules are met and you get low ticked, can you re-enter? I did. Let's see if they go up with momentum and path. So yeah, Victor, it starts on the large chart. First, it's a termination. After it's a termination, the small chart rolls. When the small chart rolls, then I look for an HVA line. And look at that. Small triggers never rolled. Large triggers stayed down. Market squashed it. Thank you. Thank you, rules. Avoidable losses. Pretty cool, right, Victor? You didn't have rules met. No reason to take a long. No reason to take a loss. Everything is rules. Have I mentioned that? Everything is rules. Process yields results. Results are a byproduct of the process. However you want to say it, guys. Your opinions mean nothing to the market. Mark Douglas says that when you stop expecting to win every trade, you start winning most of your trades. When you focus on the execution of the method rather than the results seem to follow. The execution of the method, ladies and gentlemen, means that you are insisting on the best of the best because this is your money, right? This is your money. If someone told you, hey, here's a plate of brownies, there's a little bit of poop in there. Are you going to eat it? No. That's gross. Don't do that, guys. Right? You would say, no, I need my brownies to be poop-free because this is me. This is my money. This is my life. This is my health. I'm not going to do that. For some reason, in trading, we're not as stringent on ourselves. Why would we not demand the best look to take a trade? Why would we not demand having an edge to risk our financial well-being? Because I'm bored. Because I've been waiting for 3 hours. Because I missed this one, right? Because the dog's mad at me. And then with a little bit of experience, guys, you start holding these looks for fibs. With a little bit of experience, you start holding for bigger moves, right? Where's the next trouble? The next trouble, this could create a bounce, but it already did. Momentum is up, path is up. So maybe you take 100, right? Maybe you hold for the bigger move. Good morning, 10K. $10K took it. Odds favorable. Potential to break. Pull back to the area inside of triggers. Easy money. Is this gold, 10K? Same pattern, different market. Russell, same pattern, different market. Early entry, 10K. That was your good one, right? Beautiful. Guys, it's the same thing over and over. Nicely done, my friend. Good to see you in here. In after the reversal bar on the small, so you waited for a little confirmation. Nothing wrong with that. Stop where the market shouldn't go. No divergence on the small. This is the reason. If divergence, you would have been out the third contract. But since there was none, get out of the way. You chose to hold it. And the challenge is you're a tick off, right? So you gave it a chance to run. You already got paid on the way up. Great job, 10K. Guys, we're still trucking. Just because you make a mistake on stops doesn't mean it's the wrong trade. Momentum and path. And we're going to see if it goes to the fib. We're going to see if they really know about that area. One tick difference. Didn't make it. These are areas. I'll typically put a target a tick or two below because they are areas. So Victor, you're going to start printing rules for different trades. I like it. So when you print rules for different trades, something to think about. It's one thing to have them on your desk, right? It's awesome to have these rules on your desk. It's awesome to say, these are my rules for entry. Victor, what's even awesomer, and I know that's not a word, I'm just being stupid, is to go back and take pictures of your rules being met. Go back and take pictures of strong triggers, clear path, and pull back to areas. Go back and take pictures of triggers rolling, having that HVA. Burn that image in your head, Victor, so that when you look at those rules, the image in your brain comes up clear as day. When the market says, when your rule says strong triggers, your brain, before it ever even happens, sees this, right? It hears this, but it sees that. And when it sees weak triggers, it automatically says no advantage. And when it says clear path, it knows exactly what it's looking for. So having the rules is awesome, guys. Rules are freaking useless if you don't know how to use them, if you don't know what they look like. Are we still in this one? We are. I'm just going to let it run. Who cares? We're having fun on simulator, right? Fit the rules, let it run. KISS plan. Let's see what happens. So guys, having rules is amazing. Learning the looks of the rules is where everything comes together. So as you go through that journey, use your spreadsheet, right? Take your pictures. I give you guys the spreadsheet every day for a reason. All of your pictures can go in here. All of your pictures. So if you're like, oh my gosh, I think it's a trend trade. I'm not sure if it's a trend trade. Might it be a trend trade? Let me reference real quick. This is my pattern. Oh, it looks just like that. Let me take it. Pretty cool, right? And eventually, Victor, this gets burned into your head so strong that you never hesitate. It gets burned into your brain so strong that you don't worry. You don't fear. You don't fret. You just follow the plan. Whoops. Circles are termination squares. Oh, circles are termination. Squares are the areas to trade. In at the 10-2 mark with odds favorable momentum. Out at plus 13 and right below the fib. What a perfect trade. Second post, please, when you get a minute. This one. I thought we already did it. Odds favorable. 3 triggers through. What does this tell me, 10K? Tells me that I have momentum, but my path isn't clear yet, right? Does that make sense? It's not a clear path because all of my triggers aren't above it. What does that mean? That means I better have a nice entry. There's a pullback to an area inside of triggers. There's a pullback to an area inside of triggers. There's a pullback to an area inside of triggers. 3 potential entries. The market never goes where it shouldn't, right? So 1 divergence with only the potential very often can kill a trade. 2 divergences with only the potential is more likely to kill a trade. In 10K, this one gave you the golden goose. It decided to go up. Now, here is where the opportunity, I think, came in. You said you stayed in because there was no divergence. And it was 1 tick off of the fib, right? That's what you said? 1 tick? This is where I love this lesson, and I go back to this lesson, 10K. Fibonacci support and resistance is a process where your software measures every swing in the market, every up, every down, every pivot, and it does it on 1 time frame, and then it builds synthetic time frames, and then it starts to go to higher time frames and lower time frames, and it goes backwards, and there's tens of thousands of calculations that create those lines. So from all of these lines, 10K, came this red line. Now, do you think if you're up, how much were you up? You were up 31, right? That's awesome. If this one line is from 20,000 calculations, and the market misses it by a tick, and after it misses it by a tick, it starts railing down. It's okay to get out. Like, it's okay to be a couple ticks below this, believing that they're areas and not giving profits back. What's the other side of the coin? You do have strong triggers. That pushes a market up. You were only 1 tick off. That's not a bad thing. You didn't have divergence. There's no sign of a fight. I see why you held. So can I give you one more thing, 10K? As long as price is left of these small triggers, it's going up. And you see it all day long. As long as price is left of these small triggers, it's going up. Here's your, okay, I'm not going to hold it, red flag. When you get a close on the wrong side of the triggers, 10K, a tick away from a fib, what it's telling you is that now you're on the wrong side of momentum. And because you're on the wrong side of the momentum, and because you're so stinking close, you don't have to give so much back. Does that make sense? I love using that small chart look like that. When I start getting near trouble and I know things could go sideways, this is a great indication. And what's cool too, 10K, is it's your runner, right? You've already been paid. You've made money. You've got no risk. That's all your bonus money. That's your sports cars and limousines money. Guys, we are still in this trade. Holy smokes. One of the things you could do, 10K, is let's say that you're in a long trade, right? Let's say you're in a long trade here and you're thinking, man, everything says this area might break. 10K, you could say, until I get a close on the wrong side of these triggers, I'm going to let my runner run. I'm going to let it go up. I'm going to ride that small chart momentum until that small chart momentum goes away. And we did this one day in class where we just jumped in arbitrarily on the left side of the triggers and we held it until we got a close on the wrong side of the triggers. And 10K, it was magical. It was like a $700 trade. So here the left side is right and the right side is weak. We'll say right is weak, left is strong. That's the easiest way to read it. Left is strong, right is weak. And the same is true here on a large chart, right? Left is strong, right is weak. So Transition, it's hard to define. But I think it's a pretty good lesson because your trade was perfect, right? And you just got close to that darn trouble. And when you did, that might have been a way to just not give so much back. But you had a great reason to hold. You had all the momentum and no divergence. And guys, they're struggling, aren't they? They're trying to figure this out. How many of you get scared and quit because it takes too long? What does the large chart say? That's what I always go back to. What does the large chart say? Absolutely, Victor. That is a green HVA line. When the rules are met, you may have a long trade. That's a pink HVA line. When the rules are met, you may have a short trade. So termination triggers roll, sell a pink line. Pretty cool, right? That's it. If this were a termination on your large chart, I'm selling that pink line all day long, brother. And if there was a termination right here, I'm buying that green line. And what the HVA line is, ladies and gentlemen, is the HVA line is this area on the chart. And I'll show you exactly what makes it. I love that we're still in that trade. So Victor, these are called breakout bars. Anytime you see a white bar, it's a breakout bar. It is full giddy up to the upside, full giddy up to the downside. When you have a breakout bar, if it is confirmed by a down bar, you'll get this pink line. And what it is this is my breakout, and that pink line is the highest concentration of sellers in that bar. So if the rules are met, Victor, and the buyers try to push up right into that highest concentration line, that's where the sellers go, nope, and push. There's your breakout bar. There's your confirmation. It creates the pink line showing you the highest concentration of sellers. When the market pulls back and the buyers try to breach it, boom, the sellers unload. Here is your breakout bar. There it's confirmed, and while this is the highest concentration of sellers, there were no rules met to take a trade. So that's what the HVA bar means. It's a visual of where the biggest and baddest efforts from the people from the breakout put their money. Oh, look, guys, you made profits. Should we go break even and see if it makes the fib now? Whew, this one's been going a while, hasn't it? And now we're on the good side of those triggers. That's nice. And my path is still clear and my momentum is still strong. And I've already been paid. And I've got nothing to lose. Thank you, KISS Plan, for keeping it mechanical. Thank you, KISS Plan, for not letting me freak out on this one little fluctuation when everything here's set up. You had to be patient, Jen. You had to trust, right? Where does trust come from? Repetition, time, seeing it work, believing it works. Has anyone dated somebody and thrown them the keys to your house on the first date? Probably not. Gave them the keys to your car on the first date? Probably not. You have to build trust, guys. You have to build trust. Hunter, stop doing that. Dagnabbit. I probably did it more than once. I'm not going to lie. You're pretty. Here's the keys to my car. I'll see you later if you'll let me. If you'll kiss me once. So, yeah. Teenagers, we make bad decisions. We make bad decisions. But it was hard, wasn't it? Right there, especially when it came back and put you in negative. But nothing really changed. Everything still says up. The path is still clear. The area is still inside of triggers, right? Like, all the rules, kiss her, Gino. I saved it. But you were a teenage boy. We do stupid things. But we sure, yeah, me too. Ask my wife. Some things don't change. Guys, this is one of the hardest lessons you'll ever learn, is that you're not going to be confident on day one. But you can learn some patterns. You can recognize some looks. There was your pullback to the mid-band, price gets back above it, and your trend trade takes you up with the large chart. It's pretty awesome. It really is pretty awesome. Strong triggers, weak side of smalls that are still up. Strong triggers, pull back to your HVA, get back up to trouble. We'll see what happens. We are still in this trade. Oh my gosh. I've already got paid. I got nothing to lose, guys. I could do this all day long. What do you guys want to talk about? Let me mute for a minute. We'll just watch this. You guys tell me what to talk about. I'll be back in just a moment. Oh, I'll be watching. I'll be waiting for your questions. Whoop, there it is. Ollie, on this ES trade, I did not get stopped out of my initial entry. It was 4 ticks below the large trigger. I guess you were lucky. You are, Ollie. I put a call into the market this morning, and I was like, Ollie's been working hard. Ollie's been participating in class. He's been showing pictures and learning lessons. If you guys could just give him a break today. So you're welcome. I made that happen for you. Not really. I just put mine in the wrong spot. Mine was a miscount. My rules say 4 to 5, right? I always go 5. I didn't this one time. And it looks like I may have accidentally done 3 because I drew that little box. That was my fault. Whoa, what did I do? There we go. That was my fault. I made a mistake, guys. Turns out that I'm human. But I recognized my mistake, and I got back into the correct trade, and I got paid, and I'm break even, and man, I sure hope that large chart wins. What you've learned today is that you don't know as much as you thought you knew, and you should humble yourself and become the trader I want to be. It's hard. It is hard. And Victor, can I tell you the other lesson that you don't realize you're in the middle of learning? And you're going to hate this. You're going to hate this. Victor, you're not an expert at the high probability trend trade yet. You still question things, right? You still have moments of indecision, and you still have, I'm just not sure if this is my look, and I wonder if this is correct. And until this becomes easy, I used to do this. I'm going to do this again real quick. I'm going to show you guys, and this is a glimpse into my brain. The high probability trend trade is 3 rules, and it's 2 charts. I literally have 5 things to worry about. So I want to get good at this. When I go to the 50-50, the medium probability trend trade, that one has 4 rules, and it's still 2 charts, and there's different conditions, which means, honestly, I've got 11 things to think about in order to identify the type of trade. And then I've got either 3 or 4 things to think about, depending on the entry. And then I have different management, depending on which trade it was. So now I've got way more moving parts to make a mistake on. Does that make sense? And then I add the HVA trade. And now I have to know that terms aren't there to stop a trend, but rather to reverse it. And I have to make sure that I don't take a pullback to a mid-band because I'm looking for an HVA, and on and on and on and on and on. And guys, the more things you add to your plan before this is easy, the harder your journey is going to be. The more difficult it's going to be, because you're going to confuse the hell out of yourself. Oh, they got us break even. That's okay. And I know this is true because I've lived it. When you're John Novak's little brother, guys, and you see him take all the trades, that's when you make mistakes. So no matter which market you're on, guys, the key to everything is having a foundation. Have that super solid core basic understanding, and then learn a little bit each day. So for you brand new users, and Victor, you fall into this one. You're doing great things, but you're still new. I do blanket you guys with very conservative rules, and we talk about the recognition of advantages, and I hand you a solid plan that optimizes your chances of success, and we talk about learning to read the indicators, and that's really it, learning to read the indicators. So for all of you brand new users, if you're new with me, you're going to feel like every time you reach an area, it's the end of the world. And if the momentum isn't the absolute strongest, Mark's keeping you out of trades. And if there's not an area inside of triggers, it's the kiss of death, guys. And it feels that way as a brand new user because it optimizes your chances of success. It increases the likelihood of success. And confidence comes from that success. And they're not always bad. These things aren't always bad, but until you have the reps to recognize exceptions, it's safer that way. And just like anything, the more time you spend with it, the more you're going to see. This opens doors for you. So I encourage you, I don't demand, I don't insist, I refuse to give you trading advice. But if you learn the process that yields results, guys, if you find the path of least resistance to profits, and you embrace it, and you endorse it, and you stick to it, and you find a way to get paid consistently, guys, you begin to see more. The results seem to follow, and that's where the KISS plan comes in. It keeps you very, very focused. And you realize that it's okay not looking for all the trades. You see that there's a lot of movement and that there's probably people making money when you aren't, and that little green-eyed monster, that envy monster, jumps in and like, oh, they're getting paid, I'm not getting paid, this sucks, I'm going to start breaking rules. I've done it, I've been there. Guys, if you keep it simple, you can find an extraordinary level of success. And I've watched it repeatedly over the years. I really have. And the further new users deviate from simple, the longer they tend to learn these patterns because they're trying to learn 6 patterns at once. You're trying to learn guitar and drums at the same time, guys, and they're 2 totally different instruments. So question everything. The people that ask the most questions end up where they want to be. You guys that believe you'll be better traders by sitting in my classroom, it's not going to work that way. Post in the room, get some feedback. I want you to learn. But the most important phrase, and this is for my beautiful wife, give yourself a little grace. You're brand new. It's okay to be. It's all right to be new. And guys, they're still dancing, right? Ollie, you got rid of your market flow chart for now because you can find all the success you need with a 13-2 and a 5-1. I don't disagree. I don't disagree. But that's a decision that you guys have to make. So, weakness, but now I have a clear path down. I could have defined an entry if I wanted to take a 50-50 trade and manage it aggressively. Don't have momentum. Do have a clear path. Clearly defined mid-band with virtually no risk. I could take that trade if I wanted to. Call it a medium probability trade. Manage it assertively. Guys, the large chart's still winning. My plan said go break even. My break even was at an area inside of favorable large triggers. The KISS plan taught me how to get paid and protect my interest. You will create your own management plan based on your ability to read the indicators. Pretty cool, right? Whew, that was a lot of oxygen coming out of my face there. What do you guys want to talk about? You guys are getting real